All right, welcome back. It is time now for our call of the day. KBW upgrading Wells Fargo to outperform, saying capital return and expense saves can carry shares higher. Stocks down 7% so far this year. This was a very interesting call. The earnings seemed lackluster, Joe. The conference call seemed a breakout moment for this company because it sort of changed the whole idea, at least in many people's minds, including Jim Cramer's, by the way, about where these shares can go.
Yes, a week ago, Jim discussed with us Wells Fargo when we talked about the capital allocation story.
Made a call then that he liked it.
Yeah.
Maybe after the earnings report, thought he was premature, and then heard the conference call.
Yes.
Which led a lot of people to believe that they were just being conservative.
Yes. Strong conference call. I agree with Jim. I think the downside is buffered by that capital allocation story. I think what will be very important is Fed Chairman Powell's testimony before both the House and Senate. I am sure he is going to be questioned on the growth restrictions that Wells Fargo faces right now. I think the answer to those questions will be incredibly important for this company and could be a very strong catalyst if you believe those growth restrictions will ultimately be lifted. And I think at some point we're going to see that happen.
So Wells back. 63 is a price target that's bumped from 57.
If you read the analyst report, they're saying that 80% of the earnings growth they expect in the coming years is going to be from return of capital. So it's a huge buyback story. This is a stock that obviously had a huge amount of controversy around it. Fell 25% between mid-January and the April lows. That's a lot of punishment for a company of this size in terms of market cap loss. It's made back a lot of that. I think it will make back the rest. Buffett stood by the company, didn't sell a share, probably even added. And I don't think that changes. And if they're going to retire a ton of shares off the public market, the float is going to shrink, earnings are going to grow, and the stock should be fine. You don't have to own it, though. There are a lot of alternatives that will act as well as Wells Fargo, if not better. It's not like this thing is trading at a massive discount.
It's trading
at
any discount. It's identical. It's identical to J.P. Morgan.
To its own historical premium.
But look, I'm not disputing what you're saying. It's identical to J.P. Morgan on price to book and earnings. So the question you have to ask is
this call?
I don't agree with the call because you got J.P. Morgan, which I'm going to state as an opinion, but a pretty strongly held one, is a better franchise. It has less problems. It has less damage, and you get it for the same price.
Well,
it's got a better growth
I'm not asking you
trajectory.
I'm asking you about Wells.
Yeah, I wouldn't buy it because there are too many alternatives out there. And you can't say, well, it's just about Wells. No, look, the four major money center banks, Citigroup, Bank of America, Wells Fargo, and J.P. Morgan, all right, they all are pretty much identical in what they do. So if one of them has damage and trades at the upper end at a premium rather to the average of the other four, I just don't see why you would buy it.
They're not all identical. Wells has a domestic business.
Exactly.
The others have foreign business, with Citi having the most. Here, I disagree with Josh's supposition that 25% is a lot of punishment. I don't think it is, because it had a premium multiple based upon management. And what we found out is the management, the emperor, had no clothes because they did it through disreputable sales practices. So once you lose that luster, that shine, then you deserve to trade back there. So here's what I think on the stock. So I think that going forward, that probably the worst days are behind him, even though management has shown an inability to guide and beat, which you would hope. Maybe they get it now. And that going forward, that it'll be okay. However, like Jim, there are better places to be that are cheaper. And if I'm going to pay this premium, I'm going to own Jamie Dimon.
I actually don't think the fundamentals are going to matter as much as the capital return. So in other words, they might not grow. Hold on. This is an analyst with a bullish call who's saying they're probably not really going to grow. I don't think fundamentals or a bettering of the fundamental situation at Wells is going to be as big a factor as how many shares they buy back and how much capital they return.
So do you want to own a company that's just growing?
But you're saying the multiple deserves. Deserve ain't got nothing to do with it. This is about
got plenty to do with it.
No, it doesn't.
The way fundamental investors invest,
no, it doesn't.
Yes, they do.
We could say what it deserves to trade at. We could say what it deserves. I'm saying that what's going to drive the stock more likely than what it deserves to be is what happens with the float. And the float's going to shrink.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.